Welcome back to my Twitter mentorship, guys. So, the week has completed. Hopefully, you people wouldn't have done anything to regret or to forget because each and every day is a learning for us. So, this week was a good week, in fact. So, the draw was mostly correct, and like I would like to rate my anticipated skills of this week to be around 70%. So, that is enough to be profitable. So, this lecture will be a supplement to the first lecture, which talks about the daily bias, how to find the daily bias, the method that I use to find the daily bias. So, I hope that you people would have understood that method, how to find the daily bias, and how I find the daily bias, right? So, I'll be breaking down the price action that has happened in this current week of the pairs that I trade mostly, these pairs. So we'll be seeing how the daily bias has worked and what and all are the trade possibilities in these pairs. Okay. So probably I would exclude NQ and ES because they are trading at all-time highs. So we shouldn't be looking for shorts. We'll be always looking for longs. And when we have a proper clean draw, we'll definitely look for longs and not for shorts. So I'll be excluding both of the assets. Other than that, we'll be discussing about the gold and we'll be discussing about the euro and then the GBP. Okay. So first we'll start with the gold. So this is my favorite pair, equal to NQ. So we'll be seeing. So the day that I'm recording this lecture is on May 30th. Okay. So today is Saturday. So this is almost a weekly review. So usually on Mondays we won't trade much, guys. We won't get the proper trade possibilities. So I'll look for Monday bias. Like I thought it will be taking these lows because we know that the closing price is near to the low of the candle. So I thought this will be the bias. So initially, so first, before coming to that, we'll go to the weekly, and we will see first. So in weekly, as I said, the close is here. The last weekly candle is a bearish candle. Apart from any other key level here, like you can look for either this rejection block as a key level. Wait, so you can look for this rejection block as a key level. So apart from any key levels, we'll first look the candles, the previous candles, and then we decide a bias. So then after we come to a bias, like today, like mostly this week will tend to take the previous week's lows or highs. So that will give us a proper narrowed down bias, like whether we are going to look for longs or we are going to look for shorts. So based on the previous candle's closure, the low is nearer than the high, right? So obviously this will be our first DOL, right? This will be our first DOL. So here we have a rejection block. So this is a rejection block because it has swept previous swing lows and it has tapped a fair value gap and then formed a big wick. And also, the monthly candle, that is this monthly candle, that is March candle, has swept a low, a previous month's low, that is January's low, and it is waiting for an expansion, right? So waiting for an expansion in gold. Like the DOL is obviously the all-time highs, but when it's gonna happen, so we have to wait, right? So that scenario where we wait for the longs are getting more more probable now because we know that whenever a manipulation candle have a bigger wick, that is a longer wick than the body, the size of the wick will be very big than the size of the body. So whenever we have that type of manipulation candles, we know that the price tends to retrace up to the OT of that candle, particular candle. So this will be the OT. So OT levels will be this area. So this is what I expect in an overall perspective. So the monthly candle has manipulated, right? So monthly lows will be printed in weekly's time frame. So that is what I thought, and this will be the KISS level. So KISS level, we'll be discussing about the KISS levels soon. So just don't laugh. This KISS levels, the name KISS was derived from Romeo's kiss of death, but This kiss doesn't actually refer that scenario. Okay, so this kiss level I'll be teaching in the upcoming lectures, so you'll be knowing that. So this kiss level is meant to be taken, and then I thought that the price should come here and go. Okay, so it will be like this. And then I realized in monthly candle, see in monthly candle, the same expectations, the same expectations that the monthly candles overall range OT is already being met. So I know that the monthly lows will be printed at the kiss level of an key level. So that's what has happened. So this kiss level means it is meant to be taken. So we are in the monthly OTE and we took the lows, right? So now we anticipate for higher prices. From here we can anticipate higher prices. Okay, so this week, the end of this week, that is 29th, gave us a conclusion that we'll be looking for higher prices from today onwards, right? So to attain this narrative, price should come and take the this kiss levels low, right? So that was my previous week's anticipation. Easy, right? Hope you people understood. So if you people didn't understand, kindly rewatch from the first so that you'll understand it clearly. So the kiss level I have marked. So at the fuller range, like at a bigger perspective, I'll be definitely looking for only shots until the kiss level is being met. Got it, right? So that was my narrative. And on Monday, it was a pure gap up. So we had no bias there. We had no anticipation there. So on Tuesday, we know that the overall perspective is lower and we need a level to reverse from, right? So from here, we look for the bias. So from the closing price, the highs are nearby. So the price will take the highs. So yeah, it took the highs and it fell down. So we got our bias correct. So here the DOL is the low of the week, low of the Tuesday. And also here, this is not normal. This is a thing to watch. This is a pattern to be understood. Okay. So soon we'll be discussing about this Tuesday reversal model. Okay. So you'll understand why Tuesday alone have a high probability of reversing after taking a previous day's highs or lows when it is aligned to the bias. Okay. So now the bias for the Wednesday was low, and we know that this sweep above the previous day's high is the is the high of the week. Okay, so it's not coming. Why? Just wait. This will be the high of the week. So this made more sense that the week will continue to be more bearish. So on Wednesday, obviously the DOL is low, and then the overall DOL is this kiss level. So we'll see. Yeah. But on Wednesday, we reach the kiss level. So here, probably, so we are going to trade monthly longs. Like we have a perspective of going longs in the monthly perspective, and we printed our low in weekly perspective, right? So monthly lows will be printed in weekly time frame. So that concept we call it as intermediate time frame. So or else we can call it as profiling time frame also. So this weekly low should be printed below this kiss level, and weekly low will be printed in daily time frame, right? So here overall on Wednesday we took the DOL. So on Tuesday we printed the weekly high. So if price wanna reverse from here, we need our weekly lows to get printed, right? So this week, that is 25th of May's lows to be printed. So that's what I was looking for places here. Like I was looking for kiss levels here. So weekly lows will be printed in daily's key levels. So here I didn't get anything much. So I stopped trading on Wednesday. Like I didn't have any bias. My first bias, that is the previous day's low, was taken, and then this kiss level was taken. So I waited like, okay, what next? So here I notice another level, that is this sweep. So this is not a kiss level. Kiss level means I would like to give a smaller brief explanation telling that keys is a place where if price comes there and then it closes, the candle gets closed, means then it is not supposed to come there again. Okay, so that is called as the keys level. So this is a turtle soup. It has swept a long way and then it closed above. So this indicates that maybe on Thursday we would have a bullish bias. Okay, so I checked formally this place also. Close to low is 54, close to high is 71. So what I thought was the kiss level was taken and then it was a soup. So I had a neutral bias on Thursday. So I know that the Thursday candle was bullish. Yeah. See, again, once again, price came, took the previous day's low. So technically our bias was bearish because the lows from the close is near. So that initial DOL was taken. In fact, that initial DOL was taken within a candle, right? Yeah, 21 candle took the previous day's lows. So okay, we are not going to zoom in now. So now this indicates that the weekly's low has been printed, right? So it closed below a candle, it took the previous day's lows and closed above. Okay, so now we have a up close candle. So from the close the highs are near, so that is obvious, and here we have a fair value gap. So these two will be the draw for Friday, and price took that, and in fact it took the highs, it took this intermediate swing highs also. So all swing highs are taken, sorry. So now here Tuesday didn't print the high of the week because Friday went and printed it. So here when Thursday or Wednesday prints the low of the week, then thank God it's a Friday, it's likely to happen. So here we can see, and we can anticipate this TGIF. So maybe, I think so, I won't be talking about TGIF much in detail in this mentorship. So if you people have any doubt, you can just tag me and upload a tweet so that I'll explain you people about the TGF concept. Okay, so here you can see this is the level that the price is supposed to come after sweeping the highs, sorry, or after keeping the weekly highs or weekly swings. Okay, so this is how the week went. So as I said, on Monday we didn't have a much higher probability. So on Tuesday, Wednesday, Thursday and Friday we had our narrative very clean, and in fact this kiss level made our day. Okay, so here what and all are the A plus trade probabilities that we'll be checking now. So the A plus trade probabilities are this till this highs. So this was very less, like a very less range, low range. So next these lows and then these lows and then these highs. Okay, so these highs, so these and all are the high probable trade setup. So here we can see, so this candle opened and then it took the highs, so we wouldn't have got much time here to trade this range. So on Monday and Tuesday we would have not got any trades. So on Wednesday in Asia we would have got, so here on Asia, so this will be the open. Okay, we'll mark this as day O. So here this day open formed an SMT with this highs. So this was a SMT that got formed. So from there we can look for shots. So in 4 hour, if the 4 hour highs are to be set, we will be looking for 1 hour key levels, and then 4 hour highs are set after 5-minute turtle soups. So we'll be looking for that. So here in this area it is not clear, right? So we'll be looking for the candle to close and then we'll be trading the next candle, that is here. So here again this 1 hour highs to be set, we need a 5-minute turtle soup. So here in this 1 hour key level, this is a bearish fair value gap. This happened at 12 a.m. and even 11 a.m. tapped here, but we need a turtle soup, so we should wait. So here there is no there is no liquidity pools inside this key level, that is inside this fair value gap. So this is a scam, this is a fake bounce. this is not to be this range is not to be not for shorting. So we wait for this 1 hour candle to close, and then this highs to be swept, and then we would have shorted here from model 1, or even after taking price soup the highs. So this will be a 2.9 hour. So guys, this is a hindsight breakdown. Okay, so this is not, I didn't cut the charts, and I'm not going to show you any magic. So this is a hindsight breakdown. So I'm going to tell you what has happened in my perspective. Okay, so that when you people watch this supplementary lecture, you people should go and see the same thing in the charts, so that you will understand this better. So that's what I expect from your side. Okay, don't miss. So hope that this will be your last mentorship, and when this mentorship ends, I won't guarantee you that you'll be profitable, because that lies within you. Yeah, you should control yourself. You should have the patience to wait for a setup. See here, we didn't trade on Monday and Tuesday, but we got up early and we traded this short. So this is how patience works. You have to do nothing for 48 hours, literally 50 60 hours, just to capture this short. Okay, this trade took around 2 hours maximum. 1 hour trade. So this, for this 1 hour trade, you should wait for almost 2.5 days. So that's what trading is. That's why trading is boring, and that's why people lose. So we'll be discussing about these KISS levels. So here, this is the KISS level. So I'll be teaching about the KISS levels in the upcoming lectures, and yeah, we'll see. So this is the open. So above the open, price went, and then we got this price took this KISS. Price kissed this level, and this is the turtle soup. This is the liquidity grab. So whatever you call in your terms, and then price reverse clean, right? So you can trade this model 1, or you can trade that fair value gap. So whatever you want, you can trade. So about the entries, we'll be discussing later. So now just we're gonna just see about the possibilities of setups that would have happened. Okay, so this shot I took, and it is in my Twitter also. I posted the breakdown for that also. So after this, the trade for the day in gold got over. So on Wednesday, same, we have the draw. We have like lower prices. We anticipate lower prices in gold, right? So here the day open is this level. So this is the day open. So open high, low close. There's open dump towards upside, and then rally, or open rally dump. Okay, so here we have the day open. So we will be waiting for the day to open. So the price opened here, and then it went and tapped the 4-hour fair value gap, and we know that the daily highs will be set in 4-hour key levels after kissing our KISS levels, right? So here the KISS level is this 1 p.m. candles highs. So this we need to understand. So after price kisses this level, then we'll be looking for shorts in just 15 minutes itself directly. Okay, so that's what we do. When we spot the KISS level in the higher time frame itself, why should we go and check for lower time frame confirmations? If you need like more confirmations, then you can go for 1 hour, and then you can check that the 4-hour highs and lows will be set in 1 hour, right? So that is the thing. So but we got the KISS levels in 4 hour itself, so we can directly wait for a 15-minute entry model, and then we can trade. So this is the thing. So price open here, price kissed the highs, and then we got our model 1. We got our model 1 here, I guess. Yeah, here. Or else you could have waited for this fair value gap and took the shots. This is model 2, that is fair value gap entry. Or else you can just wait for the breaker to form, true breaker, true market sector shift. So that's aligned here. To be precise, you can take these lows also, but for me this is the breaker. Okay, so from there it's literally 7-hour trade. Do you just believe it, guys? The draw is clean, the kiss is done. So what else you need? You just need what? A proper entry way to just enter. Okay, so the kiss is done, and then the trade goes to TP. Then on Friday, because Wednesday we took the lows and then it reversed like anything. It reversed literally like anything. It reversed very at a very higher speed because Asian session just expanded, right? So the London should consolidate, but here in London it reversed. That is, it didn't give a retracement. It reversed. So that indicates that our KISS level is just so perfect. So that's the reason why when price tapped this KISS level, it reversed rather than retracing. So on Wednesday, same, this will be our day open. So I'll copy this. So this will be our day open. So the day open, the Friday open, and in 4 hour key level, it printed its lows. But here it was not very so clear. Like in 1 hour, this is a bigger fair value gap, and we have more fair value gaps at the discount level. So it was not so interesting to long from here. But once I saw this closure and once I saw this expansion, that is 21 p.m. expansion, then I like to participate in this level. So what I did is at 1 a.m. I thought of trading the open, low, high, close. So here, as I said, my DOL was around here. So that's what I tried. This is Monday's highs, right? So first DOL will be around here. Wait, I'll just show it. So first DOL will be on first DOL will be Thursday's highs, and then the next DOL will be this fair value gap, and then the last DOLs will be here. So this fair value gap caught my attention, and inside this fair value gap we had a 4-hour liquidity pull. So this will be the KISS level if at all price wants to reverse from there. So I thought that from here, if we are looking for longs, we should close our position here at that KISS levels. So I waited. So after this, here we got an SMT. So we know that 4 hours lows will be printed in 1 hour, right? So this is 1 a.m. open. So I'll just mark this. So this is 1 a.m. open. So open low. Low means we need a key level and we need a KISS, right? So key level is this order block. So this is the order block. I like to mark it as bullish order block. So this order block price tapped, that is the 1 a.m. candle tapped into this order block firstly. So this will be our key level, sorry, KISS level. Okay. So price should come and kiss this lows and then it should go, or else it should give an SMT with this lows. So that's what I was looking for. So these lows, 1 a.m. lows, were taken by the 3 a.m. candle. So this was the SMT that I got. This is silver. Okay. So this was the SMT that I got 3 a.m. and I was just looking for what is that, some CIST, some confirmation, like some reaction from there, and then I entered around here. So this was like a good displacement above this inversion fair value gap. So I thought of entering just like that. Okay, then I targeted these highs. This was around 2 hours, so maybe my SL was here. Yeah, but see what the price has done. This is still an SMT. This SMT is still valid, but price just came, took my stop loss, and then it went up. So I posted this trade in my Twitter and in my Insta also, so you can go check it. So this is how my week went. So in gold I took around 3 trades, and this was not a 7-hour trade because I had to close it here. I had consistency rule in my funded account, so I had to close it here. So here I got 2.5 hour around, and here I got 2 hour. Literally, like overall I got 3.1 or something like that. So I closed 80% in this lows, and then this was just a runner. This level, this range was, I just left a runner to run. Okay. So here I got an SL, so around 2, 3, 5 minus 1, 4 hour. So 4 hour for the week, done for the week. That's all, guys. So this was a bullish fair value gap, right? So this is how my week went in gold. So now we'll be looking at euro for the weekly narrative and what has happened. Okay. So as I said, not many people were with me. Many people were like opposing my bias. Still, I don't care much. So here we had a weekly low sweep, inside a weekly fair value gap and a proper C2 closure. So the same fair value gap was disrespected here, and still it was a, oh, what is that? It was a C2 closure because price closed here. It was opened here, low, high, close. Okay, so it is a black candle. Don't worry because this gap is still there, right? So it's a black candle, nothing else. But literally, price closed above the previous week's highs. Okay, so keeping this in mind, my initial duel was this highs, this weekly highs. Okay, so the one and only trade that I took was the weekly expansion in euro, sorry, in GBP. If that is the trade, if that trade I had took in euro means I would have got full TP, but in GU it gave me around 1.8 hour, but in euro it gave me around 3.5 or something. So I'll just show you guys. Wait. So why I took in GU was when the moment in the session that I was looking for trades, GU was trending. But EU was just chopping like anything. So I thought that GU will trend and take the duel, but it failed. Okay. So this was the weekly open. Vivo will mark. So this was the weekly open. So as he said, I will be anticipating open, dump and rally. So open low, high close in both the pairs. So that was the thing. And here I was looking for the weekly lows to get printed. Okay. So weekly lows were, like, I anticipated the weekly lows to get printed inside this rejection block. So this rejection block means this is the kiss level. Kiss. So this is a kiss level and this will be a rejection block. So when price tapped that, like, still I remember here we'll just look for the bias and come. Okay, so it will be more it will make people understand more better. So here the Monday had opened with a big gap, and then we'll be looking for the distance between the highs and the close and the lows and the close. Literally the lows are near, guys. See, this is the close 127, that is 12.7 pips, and here 12.6 pips. So see guys, this is how this bias method works. So the previous day's lows were the DOL, and then it took, and now the previous day's lows were supposed to be taken, right? So this was the DOL. So price took the previous day's highs and see how it closed. So then the Thursday took the previous day's lows and it tapped the kiss level and gave a beautiful SMT. I guess here, yeah, this was also a beautiful SMT. This was not an SMT. So this trade, now I would like to tell why I changed the asset. Okay, so here this was a rejection block. This was a rejection block in my narrative and not actual rejection block based on the rules. Okay, so the actual key level here was lows order block. Okay, so that was rejection block, and here it is a order block. So you people can ask, bro, here it will be the order block will be here, right? So when price closes above this level will be the order block. So here this is where narrative comes into play. When you know that, when you know certain levels, when you know from here price might move, when you know that the price will move from here, so those levels can be considered. And see guys, nothing is wrong or right in this trading. Okay, so whenever you make profits you are right, and whenever you don't make, you are wrong. So that's all. It's between you and you are gonna journal your mistakes, your freaking mistakes, and you're gonna overcome your freaking mistakes and not others' mistakes. Okay, so here this was a bigger SMT, but here the kiss level was this lows. So this was more clean, right? This is more clean, right? So this is kiss level. So I would have marked this kiss in my trade breakdown also. So this is the kiss level, and this is more cleaner than this because here rejection block has been broken here. But see here, this was an SMT. This was a SMT, sorry. So this was a stage 1 SMT, and this is a stage 2 SMT. So it indicates that price is gonna freaking reverse from there. Okay. So what I thought is here, this kiss is very obvious. So I thought this previous day's high will be taken. Okay. So same I thought in Euro USD. So what I thought is I just dropped to 1 hour, and once I mark this SMT, okay, so once I mark this SMT, then I had two ideas. One is either entering in the fair value gap or just like that. So I thought price shouldn't come back down. So I entered, and then this was my dual. So it was around 2.7 hour. But here it gave equal highs with the Euro's previous day's highs. So it was literally equal. So almost equal. So when candle came here, I kept an alert. Like I'll always keep alert 10 points, 15 points before the DOL. So when that alert got hit, I came and closed here first, and then only saw it was not actually the place where I was supposed to close this GU trade. But still, it went right. So this was the one and only trade that I took, and I closed it around here 1.8, some 1.9 hour somewhere here, because this wick was very like price went and it came down. But in euro, you can see it that the price went and took the highs near it was near the highs. So this is where I closed the trade. This was a clean trade though. So that was the thing. And another trade opportunity that I saw in euro, this time in euro, because the fair value gap was cleaner in euro. So now we know that the bias is gonna be bullish, right? So this fair value gap was around the discount level, but here in GU there was no fair value gap. So I was waiting for the price to tap that fair value gap. I had a premium discount range. So this is the equilibrium fair value gap or the discount fair value gap. So price supposed to reverse from there, and this was a range low. See this candle, and one, two, three candles formed inside the previous range. So that is the 9 a.m. candles range. So this indicates a good opportunity for longs. And then I came into 1 hour to look for the price to print its lows. Wait, yeah, I came into 1 hour and waited for the price to print its lows. So in 1 hour we have a clean fair value gap right here. So this is the place from where price is supposed to reverse. So in that fair value gap we got this kiss level. So once price takes this kiss level, it should go up, right? So it's the turtle soup level. People who trade CRT will know this level. So here actually I saw longs here, and I was waiting for my limit to get filled. And you know what, I'm gonna tell you a funny thing here. So I'll keep myself here and see, I freaking lost this 3.5 hour trade because I just put this limit order and then I just got out. I had work and I went out, and I thought of moving my stops to break even at this highs. Price alerted, price triggered my alert here. So I thought it was a TP, but it didn't even trigger. It was just around, what the F5, I felt after coming to home. It was just around 0.4 pips, and then it didn't trigger. It went without me. Okay, so that's part of the game. That's why I use market orders. But here I failed because when I saw this setup, the price was trading around here. So I thought, okay, so we'll wait for the price to come to this discounted fair value gap, and then we'll trade. So it's okay, part of the game. So that's the week, guys. So that's one trade that I took in GU, and that's the another trade that I waited to take in EU, but I didn't take. Okay, so it's just part of the game. So this is the weekly recap of the daily bias. So in the upcoming lectures, we'll be talking about the keys levels, the PO3 levels, the how a candle will form its lows or highs, what is the open, high, low, close template. So how to anticipate a weekly expansion, how to anticipate an expansion candle. So everything we'll be discussing in detail. So just stay tuned, guys. The concepts that I have spoke about here, if you don't know any concepts other than the keys levels will be spoken by me in the upcoming lectures. So other than the keys levels, whatever the concept that I have spoke here, if you don't know, means you are not supposed to follow this mentorship. Yeah, that's true. What I'm telling is true. You should not follow this mentorship because you should know the basics. So just go and learn the basics. Just go and type the words that I'm using here in your YouTube, and just learn about it and come join the mentorship. So this video is not gonna go anywhere. It will be in my Twitter, or later it will be in my YouTube. So you can check it there. Okay. So just go and learn the basics and come. Just don't waste your time after watching this lecture. Just go and mark your charts and then see what has happened in hindsight first. Then you can see in the live market. Okay guys. Ta-da, bye bye. Take care guys. See you in the next lecture. Until then, cheers.